Will the US housing market finally crash? Let's look at some of the data. I've never been good with the housing market. None of the pros I've known have ever really gotten the message concretely through me, and they've always kind of just said, oh, look at the houses in the surrounding areas and base your price on that. If it doesn't sell, mark it up 20% and wait a week or something crazy like that. None of them have ever given me a solid foundation to really understand the housing market, let alone how they essentially handle their price valuations. Honestly, it always seemed like an endgame for a lot of the furus out there who are lucky enough to reach millionaire status but still want to milk some extra money out of you just to pay for that house. I don't know where the proper place to start is, so I'm going to start where I felt like, which is looking at people's personal savings rates. And as we can see, it's up to about 5.4%. And this is kind of a ratio to disposable income. What I'm looking for is that I want to know that people have just money to spend. And it seems like no, if you compare this to, obviously the previous year that we had and everything, right? But let's look at this from a larger scale. As you can see, yes, it significantly dropped, but we're still not at the worst point right around here. I don't know what happened around here. You guys can tell me down in the comments down below. If we ask the Dallas Fed, they also see signs of a brewing US housing bubble and that there's growing concerns for housing prices basically becoming unhinged from actual fundamentals. But they also go on to say that essentially there's actual real housing appreciation going on right now because due to basically all the costs associated with building a house nowadays, it's actually justified in their current prices. They also go on to say that essentially people are their own worst enemies and that FOMO can essentially cause a self-fulfilling mechanism to actually make housing prices essentially overvalued. Here's some data that they have. Basically, if we're above this red dotted line, they were overvalued. And currently, yeah, we're above that red dotted line. However, to counterpoint this, apparently people can still afford it because if we look at the US price to income ratio, we're still below that, red dotted line right there. In conclusion, they said that our evidence points to people needing to subscribe to RedemptionTrades' YouTube. Subscribe now and give this video the finger while you're there. Out of curiosity, I wanted to look up the unemployment rate, which I'll touch upon more, but currently it's at an all-time low at 3.6%. I will always encourage you to use first sources. However, I will use layoffs.fyi because I think some of their footnotes in the tracking, it's actually pretty good. But again, take it for what you will. But according to them, they saw a large number of layoffs back in 2020, and then 2021, not so much, but then a sudden resurgence in 2022. And these are not small companies by any names. Like you have PayPal, Tesla, Coinbase, like you name it, Netflix on here. Like there's a lot of big companies, specifically tech companies on this list. I might be seen as cherry picking a little bit here, but essentially I weigh this with a little bit more impact because these guys are the six-figure high-income earners who have a lot of disposable income. To show you my thinking behind that, I pulled up real medium household incomes, which is about 67,000, and this is delayed data from 2022. No 2021 yet or 2022 yet, but essentially what I'm trying to infer is that the tech workers have a six-figure plus income, and we're talking like 100,000 base and so forth. They are more likely to be able to spend on a house or to qualify for credit to actually borrow to buy a house and so forth. Speaking of credit, I decided to look at the New York Fed Microeconomic Household Debt and Credit Report. That was a mouthful, so please subscribe. Anyway, so they said that essentially there was a solid increase in total household debt by 260 billion. And, there was also some other figures here, but essentially this is higher than it was at the end of 2019 before, what happened and so forth, whatever, right? But the thing that interested me was also that credit card balances declined by 15 billion. However, they also say that they're still 71 billion higher than it was in 2021 of Q1. To put it in more layman's terms, essentially people are paying their credit cards. However, there's still a mountain more of debt behind that. So people are working, they're paying off their debts, and the economy's working, and it's better than before, right? I wish I lived in a fairy tale land where that's all true, and it seems a little too good to be true, with talks about inflation, the Federal Reserve raising interest rates, which historically has caused markets to topple and start recessions. But let's look at some possibly unrelated news markers to this. One of the greatest things about being in the Federal Reserve is that you don't care about turning up a profit, right? So you can essentially just buy up all these mortgage-backed security debts here and so forth. And if you match this with housing prices, maybe there's some sort of weird correlation with that and the interest rates going lower as well, right? Now, let me ask you a question. What would happen when the biggest buyer, which caused all this mania to go up and so forth or whatever, right? What if they just suddenly became the largest seller and there's not enough buyers or not a big enough buyer to essentially catch this? What would happen to prices? Let me just ask you that. And one more thing about interest rate raises. When those companies that were borrowing all this free, cheap money basically because it costs them nothing just to borrow the money or whatever, right? When that suddenly becomes more expensive, these companies that focused on growth at all costs and not actually turning up a profit, what happens when you turn off that money spigot that's basically funding all their stuff? Well, they didn't turn up a profit before, and there's no sense in doing that right now. So what can they do? Well, they could start by cutting some of their costs. I don't know, something like their employees, but that's, kind of a crazy school of thought. And when that fails, you could always pull a Chapter 11 bankruptcy. I'll leave it to you to come to your own conclusions, do your own research and so forth, whatever, right? I'm just pulling up some weird sort of points that I saw that contradict each other. And honestly, I also wanted to throw this back to one final point, which is if you guys remember The Big Short, they had something called ninja loans, which is no income, no job applications. Yeah, let's just say that it came back. Say hello to the NADA loans, when nothing is all you need and nothing is basically all you're going to be left with anyways, but nothing down with 100% FHA purchase financing, one submission, one approval, one closing, etc., etc. 580 FICO score. If anybody knows anything about credit scores, 580 is kind of a crap score to have. Like, you're pretty much classified as poor credit right there and then. Yeah, it's not that great. But just when you thought it couldn't get worse, it does. Say hello to the NONI loans. And this one is a little bit better, but not that much better. It's not the best. No, it's asking for at least a 600 credit score. And they also have stuff like, a 40-year amortized term. And those of you who are smart enough to, or actually did the work, realize that the longer the term for the loan, you end up paying more because of the length of the loan. And this one seems designed for people who want to do a cash out refi with the whole like cashing out and so forth. Right? They even have a term for that. For foreign nationals, if you guys remember what I was talking about at the beginning of this, but the ninja loans, they use the same terminology. No income, no job, no US credit required. I'm not trying to convince you whether the housing market's going to crash or not crash. I just saw a lot of really conflicting data with one another. Like, in one sense they'll say yes, the other sense they'll say no and stuff like that. And seeing how the inflation data can be very easily manipulated, when I looked at Zillow, I saw a lot of homes were suddenly slashed by 20% in their prices. But there were also a lot of holdouts that didn't want to slash their price, but they aggregated in a way to where they just kind of met in the middle, where it seemed like the housing market was cooling. Maybe if it is, maybe if it isn't. I'm not really tracking a lot of the regional data, and I'm not tracking stuff like price history, new inventory back on the market, how long they've been on the market, etc., etc. If there was ever a time to beat me at something, this is probably your opportunity to, because if you want to do the work, go right ahead. I'm not personally interested in it, but I'm kind of curious as well. But anyways, that's all I have to say. Just remember, just because you're a day trader doesn't mean you have to trade every single day.